I think the increasing acrimony that we're seeing at these international summits, whether it's the G7 or NATO, and you look at that in the context of the escalating trade war that we're seeing between the U.S. and China. So it's not only tension with China, but it's among our allies as well, and that's something that is unsettling the market here.
And it's interesting, we seem to have new trade headlines every day. Yesterday, it really roiled markets around the world. Today, not so much. We've shrugged it off. And this is a pattern that we've seen happen over and over again. So what does that mean if you're invested in this market, both in the U.S. and globally? Should you be worried about a day like yesterday, or should you not focus so much on these bumps? I mean, is this going to be a long-term problem or solved day to day?
Well, I think you should be worried. If you're not worried, you're not paying attention, or you're overly complacent. I mean, we've been growing a bit more cautious in terms of our investment positioning since March, since the trade war fears really came to the forefront. But I don't think it's time to panic and go to a full-blown defensive position in terms of investment strategy. So, we've got to balance things, right? So we have this tug of war in the market between very strong near-term fundamentals in terms of earnings and the macroeconomy, but then escalating risks on the geopolitical front. One is here and now and definite, and we can see it, and the other is a potentiality. So I think you want to be cautious, but you don't want to head for the hills just yet.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.